Soalan tak payah cakap.
Good morning, madam. My name is Aisyah, and our group consists of Arrisya and Najwa. First of all, I want to say, as you can see, Najwa is unable to open her camera because she is currently in the hospital right now, and she doesn't want to disturb the environment she is in right now. So we can start.
Okay, so Assalamualaikum, Madam. My name is Najwa. So for the first theory is unrealized profit closing inventory. So when a corporation or company transfer finished item to the selling department at a profit and the goods are recorded in the balance sheet at the transfer price, the closing inventory contains an unrealized profit. If the markup profit based on cost of production remains constant, or any changes in the value of closing inventory will result in a fall of increase in unrealized profit. If there is a rise in unrealized profit on the closing stock, so this increase will be deducted from our profit and loss accounts gross profit. And if there is a decrease in unrealized profits, so this decrease will be added to our profit and loss accounts gross profit. Any unrealized profit of closing inventory should be deducted from the closing stock in the balance sheet. So that's all from me. I will pass to the next presenter.
So next is hello madam, my name is Norain Aisyah. So I will explain about the non-controlling interest. So a non-controlling interest is a share in a corporation that is less than 50% owned by the investor, which has limited control over how the business is operated. How the business is operated. So if an investor has a non-controlling interest, it is based on the percentage of voting rights. A minority interest is another term for this kind of investment. And also a non-controlling interest is also explicitly used in connection to subsidiaries where the original business does not own any equity interests. So I will pass to the next person.
Lastly, madam, is intra-transaction and consolidation account. What is intra-transactions? Is the transaction between companies of a group. These transactions must be removed from the consolidated accounts so as not to inflate the net income of the parent company and of the companies of the group. These are the most common example is the issuing of a sales invoice for the supply of a service. How is intra-trade treated in the consolidated income statement? The effect of intra-group trading must be eliminated from the consolidated income statement. Such trading will be included in the sales revenue of one group company and the purchase of another. Next, we'll show you how the workings for consolidation SOCI, cooperative profit attributable, and extract of it. First of all, for consolidated statement of comprehensive income, we have to calculate the percentage of shares by the number of OS acquired by unit, then divided by number of issued times refunded. So you the total sum will be 69%. And then we have to find the NCI 100% minus 69% equals to 1%. Next will be finding the intra-transaction. Then unrealized profit, which is closing stock. Terus kena ambil from the answer. Cost plus total intra sales minus total intra cost divided by total intra cost times by 100, you get 20%. For the URPCS, then you count for you use RPCS. Next, we'll find the unrealized profit for opening stocks and then interest charges. Lastly, intra-dividend income, which are the formula is parent acquired subsidiary ordinary shares equal total subsidiary paid dividend times with percentage of shares parent holding. Lastly, we'll find the consolidated statement of profit or loss. So, macam biasa, kita letaklah format-format dia. Kita ambil dari atas ni. Siapa tolak, dapatlah profit after tax.
So next is we have to count the profit attributable to shareholder of holding company and non-controlling interest. So to find the profit attributable to shareholder of Sri Kandi, profit after tax parents, plus minus single adjustment, plus with profit after tax subsidiaries, times with parents percentage. So we'll get 59159,493 and 30 cents. So the non-controlling interest we will find by profit after tax subsidiaries times with percentage of net non-controlling interest. We will get 319900000 times by 31%, and we will get 9889000.
Okay, so for the last step is to find to calculate statement of changes in equity. So atas sekali tu balance BD for 1 January 2020, 1st January 2021. Okay, how to get 12,357,860. Okay, so the formula dekat bawah tu, yang A tu, so the total of retained profit BD parents minus with URP opening stock, and then plus with total retained profit BD sub C minus with pre-RP on acquisition dates, and then time with parents punya percentage, and then we will get 12,357,860. So for the non-controlling interest NCI, so the to calculate the amount, so all equity items sub C time with NCI. So the ordinary share and then we time with NCI that we get dekat atas tu. So kita dapat amount dia semua tu, and then we get 3,976,990. And then for the profit for the year, kita akan dapat from the dekat atas punya amount, which is the profit attributable to. So dekat group return profit tu kita ambil amount tu untuk profit for the year. So for NCI kita ambil daripada yang dekat atas tu juga, yang profit attributable tu, but dekat bawah tu ada NCI. Lepas tu the formula is PAT sub C time with percentage of NCI kan. So we get 9,889,000. Okay, so for dividend paid, kita kena minus kan. So 800,000 we get from the SOFP dekat dalam question yang dia bagi tu. And then we total up, and then we got the ending balance lah of group retained profit and also NCI. So that's it. That's all from us. Thank you so much.
Alhamdulillah.